Yeah, I'm losing my edge.
Research, enter, exit, repeat, Pete. That is the process for trading. It's the mantra that you and I internally invoke every single day without even realizing it. And it's all you really need to know if you want to be an active short-term speculator or a trader in any asset class here, futures, stocks, anything. I believe that this kind of gets everything from A to Z in a trade, right?
I couldn't agree more. I mean, this is kind of what we profess, is this idea. If you're again, right now we don't have options on futures on the small exchange,
Sure.
But this is what we continue to talk about, is this idea of, strategy, research, some strategy, mechanics, execution, and let's go back to the well. Everything we continue to do this. Everything that we find works. We kind of, if that setup keeps emerging and evolves there, these are opportunities we take. And what is repeat?
That's you. That's repeat.
Oh,
because
was that always there, or did you just fix it?
No, I just changed it. I was trying to be funny, but what's not funny is your money here, and so it's yeah, we'll get into it here in a second. But this is one of those things, and we try to convey this often. So anybody who's new to the show or has been watching forever, this lends itself to futures, and we're going to talk about a futures market here in a second, and it's in the foreign exchange market. But I cannot reiterate this enough. This is tried and true for every product, every asset class. The number one question that we get is, oh, I've traded stocks, but how do I trade futures? And the response that I always give is the same way that you traded stocks. Like it's this idea of, like, you think something is cheaper than it should be, or you think something's more expensive than it should be. You put some numbers around it. That's the research there. You get into that trade, you get out of that trade, and then you go back to the well, like you said, Pete. And it's this funny thing. And so, we're going to dive into a futures product here. We're going to dive into foreign exchange, which maybe is a little bit foreign to some people, but this lends itself to Apple's stock trading. It lends itself to S&P index option trading. Really anything here. You find something that's intriguing, like the small dollar breaking down below all-time lows as we speak here for the SFX product, and for US dollar in general, going back to 2018, new lows here below 147 in the SFX product. And it is a futures product in foreign exchange, but this process here, of I found something that's intriguing. It's the same as, Tesla, when it went on that huge run a few months ago, and it looked like it was never going to stop. And whether you thought it was intriguing from the long side or the short side, you go from that intrigue to research to, okay, how do I enter into this position? And then how do I exit? It works for, Pete, you actually started out in foreign exchange futures trading, but you've really ran the gamut of every futures product, every asset class. You've entered options into this, and you've even gotten into stocks. This is all it really takes here, right?
It does. And you know what? I think that you mentioned sometimes you get the question about complexity of futures. One of the wonderful things is it's a binary outcome with futures. I'm not talking about the options on futures or a premium play, but it's a binary outcome. It either goes up, goes down. You're either right or you're wrong. There's an elegant simplicity to that. That's really powerful. That lends itself to your mechanics. So, you know what? This three-step approach, and I like the way you've done this. It's actually right. Your determination, your research, your research leads to your strategy. Your strategy then leads to the mechanics of where you enter the market and where you exit the market. And you know what? It is a very straightforward process. And I like, we've talked about simplification of idea generation and directional management, but this is really putting it into a very concise format. I think this is great.
There are a ton of resources out there that just, we're one of those resources that are constantly putting, interesting move here, interesting move there. Look at this market, look at that market. It's a matter of, sifting through that, finding that market, and then applying a little bit of research. And maybe I'm slightly better than most at crunching numbers here, But I guarantee you can, as long as you have charts or maybe you have some data. We're working on getting our small exchange data to as many people as possible so that they can manipulate it, they can do research, and that will be coming soon with APIs and everything. But also, just if you have charting, you can kind of do some research on your own. And I went a step further and crunched the numbers, but you look at, I believe it's a little under 10 unique new lows in SFX this year. And the average move the week following a new low in 2020 has been positive 0.6%. And you can kind of find that yourself here. Okay, January 1, this is a nice big up move. Oh, boom, new low. Immediately you see this bounce. And that's
right.
that was a crazy example, kind of the craziest data point in the set there. But then you go down here and you see, okay, next new low is in late July. You got the bounce. Next new low, early August, you got the bounce. Here at the end of August, a nice bounce off of those lows. And the same when we got to September. And the same with the lows that we saw a few weeks ago, the lows that we saw last week. And hopefully we'll see what happens of this new low. But that's just that when you think about research and stock analysts and all of these terms that are meant to scare people away and thus cause them to have to pay someone at Wells Fargo or Merrill Lynch a ton of money to do their research, you can do this stuff on your own. And actually, just a quick plug, I guess, we're giving out free research from the small exchange on a weekly basis. And right. I mean, a daily basis with these videos. But if you go to our subscriber page, you can buy a subscription there for $100. But we're giving out a light version of all this research that we think is intriguing on a weekly basis. A ton of resources there, but you can also do your research on your own. And then, Pete, you can speak to this a little bit. The next step is entering. And when you're entering into a position, Pete, it's a matter of, looking at that market for a couple of days or the last handful of days or weeks, seeing, okay, how much can I expect it to move? And then if I'm going to buy this market today on Tuesday, and I can see here SFX, our example, it's rarely moving outside of 50 cents or $1 here. I can't expect to buy it like $3 lower. So then, okay, it's intriguing to buy SFX. I want to do it today on Tuesday. Where are you entering your bid on a market like this?
Well, on a day like today, when you're taking a look at this, we're down 24 cents. If you want to look at this, the 24 cents isn't that interesting. I think we had looked at, there's not a lot of interesting basis. What we tend to look at as extremes in a lot of markets today. If you're looking for an intraday play, you're not here yet. And what I'm talking, when I say this, and we talk about research and strategy. If you have a longer term strategy, this may be an interesting place because we're close to lifetime lows. So am I going to quibble that I'm not getting the extra 25 or 30 ticks? No. But if I'm going to look for an intraday scalp, and remember, intraday scalps, you should always afford yourself the freedom to trade both sides of that. So looking at this, don't worry about so much that the 146.5 is a recent low off of a pretty extreme move we saw to the upside. You want to be able to trade this between 50 cents. If you had traded between 50 cents and $1, and we talked about this previously, on either side of this, long and short, you've had a productive round of trades here. But for a scalp, if I'm looking at something I want to put on today, Tuesday, and maybe wear through the end of the day today and look to Wednesday, I'm not quite there yet on that scalping range. For that, I'm taking out this idea of we're at these lows. That's not playing into a intraday scalp, because what we are is we're not at the lows of an intraday scalping range. So this for me is a patience trade. I certainly don't want to, I'm not selling them where they are, but I'm really not buying them on an intraday scalp basis the dynamic we had here. I honestly, Frankie, to tell you the truth, I thought this was even going to sit a little bit tighter than it was. It has been and I shouldn't say that because it has been for this month, but it has been a frustrating dollar trade pretty much this entire year.
Sure. But I'll speak to the other side of that argument, which is, 24 cents lower, not a lot. And if you are throwing out that price extreme, not a lot to work with intraday. But here on Tuesday with a new low, I'm more speaking to the fact that you can't expect this market. I'm going to buy this market down $1 or down $1.50. I would say, okay, it's down a quarter. Usually we're seeing anywhere from down 50 cents to down $1. That's like the biggest moves here for the last few months. So I would probably put a bid in. I would enter into this market, maybe another 20 or 30 cents lower, or depending on if you want to get this exposure on at some point today, maybe 5 to 10 cents lower. But we're very rarely going to these markets like you were speaking to, Pete, and just lifting the offer because we like the trade. So a little bit lower than where it is, but you have to have that realistic expectation, like Pete spoke to, where you can't expect, oh, well, since I'm entering into this market, I need it to be down $1 or down $2. That's another thing that I get from a lot of friends and people who are new to trading is I say to them, oh, you want to buy Microsoft or you want to buy Tesla or whatever, just put it in an order to buy it slightly lower and look to get filled. And when they hear that idea, they usually go, oh, okay, well, I'll put in my bid a lot lower. And they put it 10% lower. And it's like, I don't think you're going to get hit on that. So it's a matter of a little bit of patience, but being realistic about it. And SFX, the realistic is about, 10, 20, 30 cents lower than where it is, but not much more than that. And then what can you expect to exit out of it for a profit or for a loss if you take losses in your trades? And on a weekly basis, you're seeing this SFX market move a little over $1. So this is one that you really can't expect, Pete, too much out of. And it's not to say that, oh, it's a bad trade and stay away from it. No, it's just a little bit slower moving than your Teslas or your Bitcoins or anything like that. You can't expect, oh, I'm going to buy it here today at 147 and I'm going to sell it next week for a $10 profit. I'm going to sell it all the way up at 160. No, that's just not going to happen. It happens maybe once or twice per year. What you can do is put in that order. If it's at 147 right now, put in that order at 146.80, 146.90, something like that, and then look to sell that back at 148, 148 and a half. That's a decent trade here, Pete. And so that's, you do your research on a trade that's hopefully a little bit greater than 50% successful historically. That's what we're usually looking at, just north of zero in terms of average P&L and north of 50% in terms of success. Patient on that entering if you're buying, entering a little bit lower, but something that's still realistic. And then also you have to be realistic on those exits. You can't be hoping for this home run ball. I mean, think about it, like if you're waiting for an outlier outcome in your profits and you're waiting for that outlier outcome every single week, those two ideas are direct conflict with each other because outliers don't occur every week. And so you have to be realistic. Of course, every couple of months or every year, you're going to have the trade that is like, wow, I was expecting to make $1 and I made 10, but you can't wait for that every week. And so it's research, enter, exit, repeat, all with realistic and patient entries and exits.